Hello, everyone. Happy Thursday afternoon, last trading day of the week. Futures are still open and will be open overnight, but the stocks are closed tomorrow. We'll bring on Bob in a second. We already talked about jobless claims this morning. We'll get Bob's take on it. Bullard was speaking today. We'll see if Bob has anything to say about that. And then it was just a rig counts and some natural gas numbers. Tomorrow, remember we have non-farm payroll, even though everything's closed. So that remember to check in on that. The futures will be open a bit after it comes out, so that's the only way to participate in non-farm payrolls. And then it's the weekend and happy Easter. Tomorrow being Good Friday is why the markets are closed. The S&P map, Microsoft, Google, Meta leading the charge higher. All the mega caps pretty much bounced back except for Tesla. Oil pulling back a bit. You can see comm services leading the charge, then utilities, real estate, and healthcare. Fed watch is now 51% for the 25 basis point, but really 50-50 going into non-farm payrolls. All right. And fear and greed index fully back to greed mode. We are in greed mode going into Good Friday. All righty. Let me get Bob on here. Oh, let me say hi to everybody. Hello, John. Hey, Patrick. Good afternoon, Jacob. Good afternoon, Stafford. Good evening, Charles. Good evening. Coco is still alive. That's because your other account was banned. Happy pre-Friday from Daniel, everyone. Thank you, thank you, thank you. All right. With that, now let me bring on Mr. Iacchino. There you go,
What's
Bob.
up?
Hello.
How are you guys doing?
I think everybody's good. Happy Easter, by the way.
Same to you. I
I
really
hope
hope
my I hope my Easter basket's filled with good things.
what you just put up there, because this is so I want to talk a little bit about this, and I want to talk a little bit about Bullard, because people are talking about how CPI is important next week, and it is. CPI is important. I think CPI is important in this way. When you look, the Fed concentrates on PC. We know that. And when you look at the year-over-year CPI, it's fallen basically six of the last eight releases. Two of those, one of those was no change at all, and another one was a slight rise. When you go to PCE, it's only four of eight. PCE has not been as, what's the word, weak, has not been recovering to what the Fed would like to see as easily as CPI has. And it's in that context that I think CPI matters. Otherwise, I don't think it matters much at all. I think it matters as to if we get a little pop in CPI, it will do more to confirm that the volatility we see in PCE is more the case, right? It's more what real inflation looks like. So that's where CPI matters. We forget we get retail sales next week. And when you looked at, I talked about GDP, I wrote it on Substack. We had retail sales drop in the GDP number, consumer spending, I should say, dropped in the GDP number. And we used to look, Mike, remember we used to look at Redbook it comes out every week. We used to look at Redbook all the time because it comes out every week. That's the Johnson Redbook. It's retail. It's a retail sales number. And Johnson Redbook, I think, only matters now when you look at the 1 month moving average, which is something that I got from Invictus Research. Again, Mike Singleton, he'll be on the podcast in a couple of weeks, along with our beloved Mike Arnold. It's going to be two people on the same podcast. We'll start the show with Mike, and then we'll end the show with me, Mike, and Jim talking to Mike Singleton. This is something he put out, and he showed how it rolled over basically the middle of the year, or toward the end of last year, and has not really recovered. And the trend seems to be going back towards zero, possibly negative. And when you combine that with the way that the savings rate has been collapsing, and the savings on a dollar basis is it's almost gone. Like all the people's excess savings, consumers' excess savings is virtually used up. And a lot of that excess savings came from COVID checks. pandemic relief. So you combine these things and they line up. So based on that, I think retail sales is likely to be on the weaker side. I don't know what they're estimating retail sales is going to be. I didn't look at that. They might be estimating weak numbers, but I think it's definitely not going to be supportive of strength in the economy. And I mentioned this the other day. We saw the JOLTS number fall below 10 million. That's the JOLTS jobs openings number, fall below 10 million for the first time since July 2020. So there's some weakness. There's some damn weakness starting to show up. Now, that takes us to you. Do you believe the Fed is going to cut rates? Does the CME Fed Watch Tool believe the Fed is going to cut rates? I believe it does, right? We look at the
David
problem.
going down through this is through the December meeting back down to 4 to 4.25.
Is the first cut back in June?
Well, it's technically a hike in May, and then the first cut would be in June. If it's a pause in May, then the first cut would be in September.
That's ridiculous. That is ridiculous. The pause in May, the possibility of a first cut in September, okay, fine. But to me, that would be the Fed collapsing. I said I wanted to mention Bullard. Bullard said he sees inflation remaining sticky, and he downplayed financial concerns by quite a bit. So I don't know, man. The Fed keeps talking the same script. We'll see if they stick to it. Bad news is bad news now. So, and the reason bad news is bad news now is because I think deep down people believe the Fed's going to stick, but also the recession, I'm still 100% in the recession camp. And I think we'll start to see in the next batch of earnings, which begins in earnest, what, Tuesday maybe with big banks, or Wednesday? I think Wednesday.
Well, the big banks
No,
are
Thursday.
Friday. The banks technically kick off Wednesday, but there's nothing big until Friday. We covered that this morning.
I think isn't JP Morgan Thursday? I could be
Uh,
wrong about that. But I think the rest of them are wrong. It doesn't matter. The day
it's
doesn't
next
matter.
week towards the end. Let's just go that way.
Yeah, we'll update you guys as it gets closer. How's that? You combine all of the things. Mike's very fond of saying what happens is only important as where it happens, right? You can have a technical pattern, but if that technical pattern that says the market's going higher happens against massive resistance, it's not going to matter as much. So what happens is only as important as where it happens. And CPI retail sales happens as earnings are starting to come out. So it's a bigger macro picture next week than we would normally have. We also have the Fed minutes next week. So Bullard stuck to the script. The Fed should keep raising rates, he says. He says the credit fears make a recession unlikely. Overblown credit. I think he's nuts about that. But then again, that's the script. And the idea of a recession not coming now, when the Fed's favorite yield curve indicator, which is the 3-month 10-year, is at the worst it's been in this entire inversion level. I think it was at about 159 when I last looked on the 3-month 10-year.
Let me see here. There's the 3-month 10-year on the screen. It was down to, well, it bounced back into the close today, but the low today was negative 156, and the close is technically negative 145.
All right. So I'll put it the way Neil Dutta from Renaissance Macro put it. Neil Dutta doesn't see a recession, but he says that inflation is going to remain unresolved. So he sees the Fed pausing and holding or even cutting, and he doesn't see a recession. I see the opposite. I see the Fed holding rates and a recession. And I agree with him that inflation will likely remain unresolved because they're not going to get to 2% with a pause happening now. They're not going to get to 2% now, even with a recession. So anyway, that's all I really had to add. So if there's any questions for me, happy to take them. Otherwise, I will wish you guys a happy Easter if you celebrate it. And if not, just a happy long weekend.
So, I mean, the market's not pricing in anything close to stagflation.
Nope.
No, that's my worry because I think even if I think yeah, over time it's still going to come down. But what if it stays a lot stickier and we're going to drop it? Every indicator pretty much that I follow and all the majors I don't follow say recession. So it would have to be a really big, rare event for all these things to be wrong. So, but
So that's what I find interesting about Bullard, Mike, is that Bullard says he doesn't see a recession, but he sees inflation sticky. Okay, I guess he can't really say that there's going to be stagflation, right? Because that's the worst of all scenarios for the
right, well, he
economy.
can't even admit there's probably going to be a
So
recession, so they're not going to go to
he has to
stagflation.
pick one, right? He has to pick one, right?
Yeah.
So he has to pick that inflation is going to be sticky because he knows there's going to be both. The Fed needs a recession in order for inflation to not be sticky. So if they can't say, yeah, we're trying to drive the economy into a recession, then he has to say inflation is going to be sticky. He has to, because otherwise they can't keep raising rates or can't hold rates, right? If he says a recession is coming, then they have to pause and possibly cut.
I
He
mean,
knows it's.
you see, you said something there that's interesting because fine. I mean, all right. We might have we've tighter conditions. They have the banking stuff. Let's just say they pause. Okay, let's say they don't
Yeah.
do. They're still at 4.75 to 5, which was the low end of the bound they've been talking about. Whether they do one more or pause. The real key is, I mean, the people I talk to are like, if they pause, it means they're cutting, and I don't get that logic because if they pause, they pause, and unless they threw out their whole playbook, they'd have to shred up their playbook that they've been talking for a year at this point. In which case, I see them that then you might as well just ban them or get not ban them, but
Yeah.
get rid of them because their credibility for they got it wrong on the upside, their playbook they just shredded on the downside if they go to cuts.
So I agree with you. It's saying that if they pause, they have to cut goes to what the Fed has done in the past. When they've paused on a rate hike, the next move has been a cut. We're talking about we just experienced generational inflation, 40-year inflation. And the last time inflation was this high, it didn't work that way. Volcker basically, and he didn't necessarily use rates, but Volcker basically paused his actions and then went harder after the pause. And that's what I think people are missing. Is this is not 3.5%, 4% inflation that we had in 2018, where the Fed hiked rates and probably should have helped them for a while, but they backed off to the market and they immediately cut because the stock market fell. Well, now Powell's he got reappointed and he got confirmed. So now he has the rope, right? He has the runway to leave it alone and hike again if it doesn't work. So I think the pause is designed to allow the economy to absorb and slightly recover in order for them to hike again. And that's why I think Fed members are not saying we see a recession, even though bonds are clearly saying that. And bonds, by the way, also, when you look at them individually, you're seeing a situation where the bond market is saying that the Fed's done enough already and inflation is not going to be a problem. That's really, and this goes to Mike's research about stocks. Okay, that's really when it's going to get interesting. Because if the Fed pauses and the market on the back end starts to see inflation is not going away, as a matter of fact, it's starting to strengthen again. Look at crude oil this week, right? If inflation starts to strengthen again, then the back end of the yield curve has to rally to adjust for that inflation. And then the Fed has to hike again to keep the curve flat to potentially fight off inflation. So I think the pause is in order for the market to absorb, recover a little so they can hike again. That's my stance.
Do you think they're going to pause in May then?
I think there's 25 basis points more coming, but it would not surprise me if they paused. This is one where I don't feel a strong conviction either way. But I think it's 25 and pause or pause. I think it's definitely a pause, but I don't think it's a pivot yet.
Again, they'd shred their playbook if they went to a pivot. Which then I want to know how anybody believes anything they say again.
I agree.
Uh, Crystal has a question about bond duration risk. If a bond fund has a 6 year duration, what types of bond funds have lower duration risk?
Well, lower duration risk is shorter duration, right? I mean, that's just kind of a self explanatory thing. So if you're looking for less duration risk, you want less duration. So you want a bond fund that has like a 2 or a 3 year duration, if that's what you're looking for. But this kind of moves more into financial advice. And I hope you understand. I don't really want to do that because when you're asking that specific of a question, it's almost like Christo, you're saying, what should I do? And that's not really what we do here in terms of that kind of investing. You want to talk about individual trades and what the charts are saying? That's different. You want to talk about macro? That's different. But this kind of falls into, what should I do with my money, which is not really something we delve into.
Coco in his backup account because his primary account got banned. Uh,
By who?
Me.
Sterling Vandam?
No, I did. He ticked. If you're gonna come in here and say the same crap over and over again, and just that, then I'm done with it. So I'll tolerate the backup account.
Trolling is not allowed.
Uh,
Trolling is not allowed.
Bob, why is Fed? Why I think Coco means why doesn't the Fed just increase rates fast to get to 2% inflation in a short time and the problem's solved? So why haven't they just jacked up rates?
It's not solved, Coco, because it causes a mass of Silicon Valley Bank problems if you do it quickly. See, if you listen to our podcast last week, we had Dr. Kamal Sri Kumar on there. And he basically explained that part of the problem with Silicon Valley Bank and Signature Bank was the Fed's fault because the Fed was talking about inflation being transitory. So these risk managers who don't have the experience to do their own work say, well, our own regulator, the Fed, is saying inflation is going to go away, so I don't have to hedge this portfolio. Now, if all of a sudden the Fed flipped and said, you know what, Fed funds rate is at 25 basis points, 1/4%, we're going to 5. Every single bank has no time to hedge. So you have a complete collapse of the banking system, and not just the banking system, the shadow banking system. So problem is not solved, problem is created.
Hey, good evening, Anissa. Let's see.
Hi, Anissa, how are you? Anissa's great. She's such a supporter of everything we do.
Yes. After nearly every single conspiracy theory in the past 10 years has turned out true, I think I need to find a Reddit conspiracy community and search for a financial post.
I love it.
I mean, a lot of them, well, that's a conspiracy theory, and then it's like, check.
Yeah. Hey,
Oh,
I want to read something, but I got to find it.
all
I don't
right.
know what I did with it. I might have thrown it away. Go ahead. Keep talking.
I think that's it. I mean, we don't have much else. We had the nice little bounce back to close the week out, and then next week gets super important. So we're gonna see. I mean,
There
the
was a there was there was a clip where um, somebody, I think, I can't remember his name. Somebody on Twitter sent it to me, and we interviewed Vivek Ramaswamy on the podcast today, and so that'll be out in a couple of days. But basically, somebody sent me a clip of Oklahoma Senator Langford grilling Yellen, and I'm going to paraphrase because I don't have the quote in front of me. But he asked if his community banks would be protected, all their high net worth investors that have money in the community banks would be protected under this new system. And she basically said, no, only the banks that a supermajority of Fed governors, a supermajority of the FDIC, and I, Janet Yellen, in consultation with the president, dictate have the possibility of being systematic in terms of their risk. And I couldn't believe that was said out loud because that was basically saying all of these elected officials will decide whose money's protected and who's not.
Yeah, I
And it
know.
was absolute cronyism, like the definition of cronyism. And she
It,
said it out loud.
it
She
was
doesn't care.
disgusting. We talked
It
about
was
that a bit on
disgusting.
this channel because all right, now you're picking. So how do you know? I mean, essentially, if you're a big shot with, that's what pissed me off about this, and I'm still calling it a bailout with Signature Bank. Like you literally left, like these VCs left tens of millions of dollars in there. And all right, if you're a VC and everything else, and you're not even hedging off your risk because you know where FDIC sits, and then you get bailed out, and then the average person, the average farmer Joe in Oklahoma, if one of those banks go under, well, you know what? Sorry about your 300K you were going to use to buy stuff to plant in your fields. You're done. I mean, it's crap.
And some of the, and you know this, Mike, some of the richest people in the middle of the country are farmers. And they might have 7, sometimes 8 figures in a bank, in a community bank. And that account sustains that community bank with a couple of other accounts. And she basically said, no, that wouldn't be systematic risk unless we decided it was. And these are unelected people. I think I've become a single issue voter. I've never been a single issue voter before. I think hearing that made me a single issue voter. And you're right. By the way, Vivek, Mike, just so you know, called it a bailout too and was completely against.
Wait, what? Sorry. Hold on one. Sorry about that. Had a dog going nuts. What did you say, Bob?
I wanted you to know that Vivek Ramaswamy also called it a bailout, and he's completely on board with you. You'll hear it on the podcast when it comes out.
It is. I mean, I don't know how to call it anything else. You were, and
Mm.
I'm not saying that nothing had to be done, but to not even impose a haircut, and then, and the other crap is, yeah, they're gonna have to use some of the FDIC stuff, and they're gonna pass on the stuff as a tax to the banks, increase, but that's gonna get passed along to the consumers that did nothing wrong. So all your people who've managed their risk, kept their deposits below 250K, they're gonna pay in some way or another higher banking fees.
All right, so 2 more things I want to say before we go, or before I go anyway, is there was somebody on here, and I don't remember who it was, that said, look at natural gas. Shouldn't we be buying it? It's so low. And I wanted you to put up a natural gas chart and explain that this is why we wait for a pattern. We don't just buy things that are going low. This was 2 weeks ago easily. And look what's happened over the last 2 weeks. It's just going lower.
Yeah, and here,
So I don't remember who that was. Go ahead, Mikey.
I mean, I'm sorry to interrupt you, but I was just going to jump in and then let you continue. That we got a potential double bottom pattern, right?
Right. Mm-hmm.
Now it's turned into a triple. So
Yeah.
that's why I don't need to. Fine, I might. You got a couple day pop and then blah. So unless you were super nimble, which trading against the rotation zone, this is why trading against the rotation zone is why I use the concept. Because either you have to be super nimble, and to do that repeatedly is really tough, or you wait for the pattern. If it triggers, you go with the pattern. If it doesn't, just you don't just buy because it's been here for a while.
Yeah. So I wanted to point that out because I don't remember who said that. And I wanted to make sure we pulled that up here. And now there's 2 more things I want to talk about. The second thing is Coco is asking a question about the data. And now we got Mega Chad, which I'm happy to answer that one too. But Mike, you tell me how the time is. Coco says, Bob, now data is showing the recession is coming. So Coco, a couple of weeks back before Mike banned you, you said there's no recession because the data is strong. I said that the most reliable recession indicators are showing there will be a recession. Now you're saying that the data is showing a recession is coming. The data was already showing it, buddy. And I mean that constructively. Okay. So don't, now that the data is showing a recession will come means the market will bottom soon. If inflation is under control, yes. But I've said it a million times on this show. The only time, if you look back to 1981 when stocks were down over 9% and go back into the 70s, when we've had these little bouts of stagflation, the next year the market does not do well. So if you have a recession with stubborn inflation, no, The markets will not bottom yet. And by the way, neither will the yield curve. It won't flip. It may go closer to flat. It may start to steepen, but it won't flip. So just follow Mike on that. He did that research and he was spot on about it. Then I think there was two more. Daniel was one. I agree with what Daniel said here to a certain degree.
I get the Fed does not control the rates, but can influence the 2 year. I still believe they will keep rates high until we get close to the next election cycle in 2024.
Well, I disagree with you calling that cynical. I don't think that's cynical, Daniel. I think you might be right about that. But I think Jerome Powell is different because I think this is his last term and he doesn't care about the election cycle anymore. He really doesn't. I don't think Jerome Powell is looking at rates and saying, when's the next election cycle? That's how long we can keep them high. That part I disagree with. But I don't think you're being cynical when you're saying that they do influence the 2 year. They don't move the 2 year. But when the Fed right now, the 2 years fallen about 28 basis points in 5 sessions. Okay. And at the high, it was at 410 and it's approaching 3%. I forgot where it was today. It's like 329 or something. So it moved rapidly because the market is pricing in Fed rate cuts that I don't think are coming. So anyway.
Technically, the 10-year futures triggered a big double top pattern.
There you go.
So we're going to see. Well, that could take months to play out or weeks. I mean, literally months. But
a weekly chart or a daily?
Bob, why nat gas down today after a bullish report?
The report wasn't actually bullish. The report was a bigger draw than the 5-year average, but the weather demand nationally is expected to be very, very light. We're going into a weak demand period for natural gas. So the seasonality and the weather, that was not a big enough draw to make that report bullish because we're still in surplus going into a slow demand period. So it wasn't a bullish report. You have to remember, you have to know what the market is expecting. Today's report was right in line with market expectations. It's not enough to see, okay, there was a draw that's bullish. Doesn't work that way. Doesn't work that way with crude oil either. You have to know what was the market expecting to know whether a report was bullish or bearish.
Jed wants to know, serious question. Vivek seems like a logic guy, but what is a chance that they bury him by throwing loads of cash at a candidate who is in line with the establishment? Can the guy get a chance?
So I'm going to say something that I rarely say publicly. I donated to Vivek's campaign. I think everyone should donate $1. And the reason is it gets him on the debate stage. And we should keep him on the debate stage. Okay, that's what we should be doing. You know, Peter Thiel likes to say that one party is evil and one party is stupid. He says the Democrats are evil and the Republicans are stupid. It would be stupid not to allow this guy on the stage. If you're conservative, you want to hear him speak. Now, he may not be able to win. I don't know. A friend of mine who actually supports his candidacy called him Trump without the crazy. And I told him that today. I don't think he loved it, to be honest. But that's what a friend of mine called him, an outsider who speaks truthfully. But the difference is, at least so far, Vivek doesn't seem to have the character flaws that Trump does. So he might actually be Trump without the crazy and with the polish. He might. That's as far as I'm going to go. I'll say other things to Mike in private. But I didn't donate to his campaign because I'm necessarily going to vote for him, although after this podcast, I might. I donated because he needs to be on the debate stage, and I think what the Democrats did to Tulsi Gabbard was disgusting. They basically just froze her off the debate stage because she attacked Kamala Harris. Vivek's going to attack the other guys, and he's going to attack them with, as you said, logic, Jed. And he's going to attack them with his reasoning for things, which I don't agree with all of it. And they have to defend their positions. And I think that if you're conservative, you should stand up for that, quite frankly. So I think everyone should donate $1.
Christoph asks, so if inflation is rising and oil is now rising, wouldn't all commodities like softs go up?
Crude oil can cause all the other commodities to rise. Yes, they can. It's not high enough yet to do that, but they can. Yes.
And I wouldn't just go off all commodities. Wait for patterns. I mean, that's what's best. If
Yeah,
it
I'm not
shows,
saying you should buy the commodities. Thanks for that, Mike. I'm not saying you should buy them. Go ahead.
wait for patterns and stuff. And to say all, it could, but you know what? I'd rather trade things with patterns that are going up. So that's all you have to do is wait. All right, that's Jed says agreed. I'm from the party of common sense. He seems like a guy who could lead the country. Hopefully, he gets a chance. That's what I'm tired of all these debates. Let's let some of these real candidates on. Let
Yeah.
some besides freezing out people, which is absolute bull crap. Because the Republicans, if you don't have this, what's have more general debates then and give questions to all of them. I'd rather sit and watch more of the televised stuff than less. So let me weed it out. Don't try to
Right.
pick and choose and think the American people are idiots. Jeez, I'm tired of this. Pep says he's short in gold. Any thoughts? And then we're wrapping it up.
That's a stupid thing to do. That's my thoughts on gold. It depends. Look, if you're shorting for a trade, fine. Wouldn't shock me to see it go back into the rotation zone. Wouldn't shock me at all. But I see three scenarios. One, the Fed holds rates here. Inflation starts to peak again, rise again toward its old peak. That would be bullish for gold. The other one is the Fed keeps hiking rates. That's bearish for gold. That's politically unpopular and publicly unpopular. The third one is the Fed cuts. That's bullish for gold. So you got 2 out of 3 things going against you. I would recommend more you wait and buy gold where Mike says rather than the opposite where you should be shorting it. But if you're shorting it in, as a trade, I don't have an issue with that.
All right. All right. There we go. Yes, there. Banana Republic. There we go. Oh, thanks, Jed. Well said, Mike. I will put up that comment. uh, with that, let's wrap it up. Let's say a big thanks for Bob for spending this Thursday afternoon with us right ahead of Good Friday. Again, hope you have a wonderful long weekend, Bob.
You too, Mikey. It's good.
And
Always good to be with you.
text me when I should look for that podcast to get it posted.
I'll actually send you a sneak peek, Mike, in case you've got a spare 45 minutes. It's going to be in your email.
All right, great. Thank you.
Cheers, guys.
All right, real quick. I'm not going to spend a lot of time. Let's just go start enjoying a long weekend. We got a nice, remember, watch for that rotation zone. We got a rotation back up. So now going into Monday, going to be watching for a break of this highs and then the secondary reaction back up to really assess if we're getting a bigger short signal. Remember, weekly cycles are getting to the top and dailies have come down a fair amount. So next week is a huge week for stuff, as Bob alluded to. Where is that real quick? Economic calendar. Tomorrow, remember non-farm payrolls. Check in on it. I mean, I would at least check in on it, get in the habit of doing that, even if you're off. It takes like 5 minutes to just see where it came to. Monday is pretty light. Tuesday is pretty light, but Wednesday, we're starting to kick off earnings season next week. We got the CPI reports. We got the FOMC minutes. We got PPI Thursday with the jobless claims, which were a lot higher today. And then we got retail sales on Friday and consumer sentiment and everything else. So along with a lot of the big banks are Friday. So there we go. Next week's going to be interesting. With cycles could be getting into alignment next week at both cycle tops again. So we shall see. All right. Well, thank you, Charles. Thank you, Jed. So that's pretty much true on all the financials. The notes, by the way, the futures for just the raw notes, okay? The 10-year notes did not trigger the double bottom. You see here, not trigger the double bottom. The yields did. Now, I follow the notes more than the yields, but the notes did not. So this is gonna be interesting to see how this plays out. Now, I'm not saying the notes will not. They could next week trigger. They could. And I'm watching for these triggers on a weekly basis since this is a weekly pattern because there'll be multiple opportunities to get into it. So just keep that in mind. Things to rattle around your head. Dollar, again, why we follow a rotation zone. Pop in the rotation zone, rotation down. Pop in the rotation zone, rotation down. Today, return to rotation zone, rotation down. This is why trading against the rotation zone, if you want to incorporate another concept, utilize it because trading against the rotation zone is harder. You're better to wait till it shifts in your favor. Crude, still at the top, still overbought. Cycles at the time, still more so favor a breakdown play next week just because of where cycles are, but it's either a breakout or breakout down play. And if it breaks out, the target would be about 83.95. We'll talk more about some of this other stuff next week. Currencies are just, we'll check in on them next week. Bitcoin, still in consolidation. Tesla, a little drawdown bounce. I'm going to be watching for some follow through the upside before the next rollover play, but the potential big doubles still in play. And let's just call it a day, and everyone have a wonderful Easter and a fabulous weekend. By the way, besides checking in on a couple things, take a step away from the computer, take a step away from the markets, and refresh your head. Whether you celebrate Easter or not, whatever you do, just take a break. If you don't have anything to do, you don't trade futures, shut the gosh darn thing off, peek at the non-farm payroll numbers, and then enjoy the weekend and start your prep maybe Sunday. With that, I will see you guys all next Monday, and I'll talk to you then. Bye for now.